This is an uncovered Japan company research report on Gakujo, ticker 2301. Gakujo is a Japanese recruitment media specialist focused on people in their 20s. Its stack combines job media, career fairs, and success fee placement, with the Re-Katsu brand at the center. The investment question is whether this focused niche can turn a cyclical media business into a steadier talent platform. At the report's reference date, Gakujo traded on a forward PE of 8.4 times, with a 4.9% dividend yield. The balance sheet carried an 86.9% equity ratio, and effectively no interest-bearing debt. Those numbers make the shares look inexpensive, but the discount reflects a real issue. Recruitment spending is cyclical, and fiscal 2025 broke a long pattern of earnings guidance beats. Gakujo does not try to outspend Recruit or Minavi across every age group. It concentrates on new graduates, second new graduates, and young job changers. Employers pay for listings and career fair booths, while Re-Katsu agent earns a contingent fee when a candidate is hired. This media, events, and placement mix gives Gakujo more than one route to revenue, while keeping the product focused on one job seeker pool. The legacy new graduate media and career fair business remained the largest product line in fiscal 2025, at roughly 47% of sales. But the strategic core is the 20-something job change line, including Re-Katsu and Re-Katsu agent, at 37.4%. Placement matters because it is success fee revenue, potentially higher value and less dependent on a single advertising budget than a media listing. Revenue rose from 6.22 billion yen in fiscal 2021 to 11.02 billion yen in fiscal 2025, a roughly 15% 5-year compound rate. The complication is profit. Operating margin eased from 29% to 21% as the hiring market softened, and Gakujo spent heavily on Re-Katsu brand building. Fiscal 2026 guidance calls for 13.3 billion yen of revenue and 3.25 billion yen of operating profit, a demanding rebound that investors should treat as a milestone, not a certainty. Gakujo financial resilience is unusual for a small recruitment company. At fiscal 2025 year-end, it had 17.1 billion yen of assets, an 86.9% equity ratio, and effectively no interest-bearing debt. Cash and investment securities totaled about 12 billion yen. That portfolio contributes non-operating income, but it also introduces market exposure. The larger point is that Gakujo can fund investment and shareholder returns without relying on leverage. The operating model is asset-light, so cash conversion is strong. Fiscal 2025 operating cash flow was 1.90 billion yen, and free cash flow reached a record 2.27 billion yen. Over 5 years, Gakujo generated about 7.03 billion yen of free cash flow. That cash generation is important because it supports the dividend, buybacks, and investment in the placement platform even when near-term advertising demand is uneven. Gakujo's durable advantage is not scale across all recruitment. It is brand recognition and a job seeker pool within the under 25 niche. More registered candidates make the platform more useful to employers, and more employers make it more useful to candidates. The company controls sales and matching in-house. The caveat is clear. Recruit and Indeed have far greater capital, technology, and data. Gakujo's defense is focus, not universal scale. Gakujo has returned roughly 70% of 5-year cumulative free cash flow to shareholders, through 3.39 billion yen of dividends and 1.54 billion yen of buybacks. The dividend rose from 37 yen to 67 yen over 5 years, with 75 yen guided for fiscal 2026. The total payout ratio reached 76% in fiscal 2025. These returns are backed by net cash, though investors should still watch how management balances payouts against growth investment. Gakujo's forward PE of 8.4 times was at the bottom of its 15-year range and below its roughly 10 to 11 times historical center. It also sat below DIP, Persol, Japan, and Recruit. Some discount is justified. The company is smaller, less liquid, and more cycle-sensitive than those peers. The re-rating question is whether a growing placement mix and better earnings delivery can narrow a discount that looks wider than the quality gap alone. The report's author scenarios, not price targets, showed a range of outcomes. A bear case of weaker hiring demand, lower margins, and a stuck 9 times multiple produces 1,202 yen by fiscal 2028. The base case assumes about 9% revenue compound growth and an 11 times multiple, reaching 2,331 yen. The bull case requires strong placement growth and margin recovery. This is an illustration of uncertainty, not investment advice. Gakujo is a high-margin, cash-rich specialist in Japan's under-25 hiring market. Its strengths are the Re-Katsu niche, an asset-light model, and unusually generous shareholder returns. Its risks are just as concrete: hiring cyclicality, a stretched fiscal 2026 plan, thin liquidity, and competition from larger platforms. The next evidence points are order intake, Re-Katsu agent growth, and whether the brand investment converts into profitable placements. Please explore the full free deep dive at Uncovered Japan. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.